Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, June the 8th. The year's 2023. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, we just had some red news. What was happening there?
We had the weekly unemployment numbers, which it's red news. It's always been red news, but over the last probably 6 to 9 months, it's been one of those things that moves the market a lot just because of uncertainty in the market in the U.S. So the numbers came in worse than expected, and shot up.
Well, it's funny, because we were talking about it, and I said, hey, that's government news, and you said, yeah, and the candle right before the shoot up was a down or bear candle, and so when I saw that with about 10 seconds to go, I went long, and it shot up, and I grabbed 10 pips, and I was done.
Yeah, it's what she does, man. I don't know. I don't get it. I don't know why that seems to work. And I made the promise to you that I'd start keeping a spreadsheet of tracking it now, just to see if this is just something that maybe I'm just thinking I'm seeing, but I want to go and have some real numbers here and see if there's something to it.
Well, it's something I've been saying a long, long time. So, yes, it's something sometimes I do it, sometimes I don't. But so I just said, what the heck,
Yeah. So, but in any case, here we are. We're about, I don't know, maybe 30% of the way down from that big, from the 1 minute big shoot up, and we're probably 50% down, probably 50% retrace on the fib would be my guess right now. So we got a little bit of indecision in the market as which way it's going to go. Because the first stopping point is that 34 number, and then 50, and then 68.
Yeah.
We'll see.
Well, from the 3-ball to 3-ball, we are now we're in between the 23 and 38% retrace.
Yep. So we'll see what she's doing. Just right now, we're inside a flip-flop box. We're just exiting a flip-flop box. I have a state change. Low indicator 2. I'm going to take the short here and see what happens. I got in at 83.2. And it's now running against me a little bit. Actually, I'm in positive territory, but come on. We'll see what happens with this candle.
There you go.
Go. Thank you. I got like 2 dips and I'm out. That's the nice thing about setting a TP is the fact that I didn't have to do anything to get out. The market, she just took me out.
Yeah, there's a lot to be said for that. Because you like to tell me, like, do you want to be a big pip trader or a little pip trader? Make up your mind.
Yeah, this is why I like being a little bit trader, because from where I went in and to where the high of this candle is, I would have been back underwater. Now I would have been in profit. But here's where you want to be a big pip trader, because now it would have been up another pip or two, from where I got out.
Yeah, what we mean by big pip, little pip is not how much the pip is worth, but just how many pips you take. And so this is one of those ones where we know we got this return bar here, and it's like, do you have the intestinal fortitude, also known as guts, to stick in that trade?
Exactly.
And there we go. We just completed the return bar. So that's, and for those just tuning in, a return bar is in the case of M1, if the body is 5 pips or more, a big candle, you can almost look at them. Yeah, that's a big candle, so you call it a return bar. And so usually, statistically, it's based on the smart ranges, it's about a 5-pip range that's, out of the percentile. Let's see. So M1 range, so you can see here, 5-pipper is at the 91 percentile. So this particular bar that shot up was 15 pips. So that's way out of
Way
that.
over.
Yeah, so obviously that's a return bar.
Right. And it's funny because I know I'm probably beating a dead horse with folks, but if you look at that M1 candle, you know, like you said, it's like a 12-pip candle when you just look at the body. But if you look at six, you know, at the midpoint, which is at 6 pips, that's at 82.4. And if you notice, we had not trouble, but something it went down to the 82.4, bounced off of it, went up, came down, bounced off of it, went up, when it came back down, and then finally shot through it, you know, and did the rest of the candle. That's just, you know, that's just an observation I've made over time where it loves to do that at that midpoint. And, you know, if you're going to go and play return bars, what I personally like to do is go and play it to the midpoint because I know it's going to shoot up and down, put my TP right there, take my little pips and walk away. Now, at the same time, more times than not, it goes and completes those return bars. It doesn't happen all the time, but it does go and do it. So if you're trying to get more pips or bigger pips, you know, you put your TP at the open of that return bar, you know, or maybe like a pip or so above it, or 2 pips above it, you know, and it's just a good place, you know, to go and do that. And just notice this as well. If you look to the left of that big 1 minute candle, previous to the news, notice where it was hitting. You know, the top of that bar was hitting, again, right at the midpoint, right where we're at right now, right at the midpoint of that return bar. So that, you know, there's something significant about that. I don't know, you know, what it is, but it's just something I've observed over the years. It just loves to go to those midpoints. And sometimes, you know, I know one friend of mine, what he used to do is he'd look for that little up and down. You call that a little dipper. You know, he looked for that up and down like that. And what would happen is he'd say, okay, so we had this little up and down right before the news. And he would go and say, that's going to be the midpoint of how far it would shoot up if it goes and shoots up. That was his way of playing it. And then he would play it the other way. When it starts to come back down, he would go and target that place where the top of that previous little up and down position was. Does it happen every time? No, it doesn't. But it happens often enough that if you see that pattern show up on your chart, you can sometimes take advantage of it.
Yeah. What I just did was I cranked up the smart ranges indicator and I made it close minus open, so that's the candle body. And you can see here at that candle body was 12.1 or the 99 percentile. Then we had a 6.3, another 99 percentile. So you've got these, 1 minute candle bodies. Once you see something outside of, bigger than 5, that's a very rare occurrence.
Right.
So in the last 25 bars, we've had it 3 times because this is news. But that's what we look for to make these trades. Say, okay, this is where we think it's going to go. And the question is whether or not you can just really stick out that trade. Stay in that trade, all the ups and downs, watching it move, against you a couple of pips, hoping to get, those big pips.
Exactly right. And it just, again, these are just helpful tips. I don't think you build a trading plan around it, and as much as when you're in a trade, it helps you make a determination that, okay, this is the momentum. We're starting to lose momentum here. We're starting to lose our price action, and so it just helps you go and get out, in a place where you're still profitable and you don't have, a lot of pips that you had in your pocket or almost in your pocket go and evaporate on you.
Yeah, so on that trade you just took, did you experience any drawdown?
No, sir. Oh, well, actually, that's not true. I'm sorry. It went against me by a pip.
Okay.
So it wasn't very much. But so yeah, to me it was just a safe trade to take. That's why I took it. Flip-flop box. I recalled all the things that I had said, but I called out all the different things that were there.
State change indicator too. It was everything.
Yeah, it was everything. It was sort of like, geez, that doesn't happen very often. And what I like to do in those type of trades is like play it safe. Go and grab my 2 pips. Because if I would have stayed in that trade, here's the thing. From where I got out, okay, if I had stayed in that trade, I would have gotten potentially an additional 10 pips. Okay? So some people can say, look at all those pips that you left out there. Okay? But in order to do that, okay, I would have gone 2 candles after where I got out. I would have actually gone back underwater by, probably 2 pips or so. Let me go and actually measure it so I can tell you. I would have gone back underwater by 2 pips. All right? To me, the emotional havoc of that on my brain and everything they'll do for me for the rest of the day is not worth taking a situation where I had 2 pips in the bank and then be underwater for 2 pips. It's just, for me, that's a personal decision that I've made. And everybody's going to make their own personal decisions based on what your personality is and who you are as a person and who you are as a trader. That's who I am. If you don't like it, too bad. That's just me.
Yeah, well, the thing is, I could hear all the market structure traders saying, well, you had to break a structure and blah, blah, I mean, it's just like we could say, well, here's a return bar. You should just put your TP there and let and wait for it. So there's just many different ways to trade these things, and you have to figure out what works for you. And the whole emotional thing is, the brain management or big part, because, a lot of times I'll exit a trade and then, once again, in fact, it happened to me twice today. In fact, right here on the chart, I was short. I was short at 69 and I was short at 70, if I remember correctly. And I got out and only took like a pip on one and 2 on the other because I had got averaged in because it went against me by a couple of pips, but I didn't wait for that return bar, and it was like there would have been another, I think, 5 or 8 pips on that one, or 5 or 6 pips. And it's like, well, I had to follow my rule, and I saw 1 ball, and price usually bounces off of 1 balls when I'm in the trade. So sometimes they push, but and I was in 2 trades, so I go, rather than, get stuck and be upset, I'd rather be mad with the profit than mad with the loss. Right. Which is something I've been saying for over a decade.
Yeah, here's the worst thing for me anyway, is that you're now in a trade, you've got no easy way to get out of it other than to take a loss, okay? You're mad because you were in a profit, and now you got to make the decision: do I stay in this trade the rest of the day for it to get to where I know it's going to get to? When I say it's going to get there, I'm not saying that it's absolute. There's nothing absolute in the market, but here's the reality: we can see train stops. We haven't used that term in a while, but we see where the train is going. It's going from point A to point B. In our case, I like to go and say it's going, from 50 to 60 to 70, but the thing is, sometimes it's a local and sometimes it's an express. Sometimes it goes back and forth, and that's just the way the market moves.
Yeah.
But, it's sort of like I said to you earlier that, that this thing was going to go to 75, and lo and behold, where did it go to? It went right to 75.
Yeah, you know what?
We're in a straight line. We're out of time, probably.
Yeah, we're the fastest 15 minutes in trading is just about over, fellow traders. So I hope maybe you picked up a tip or 2 from Walmal and me bantering back and forth there. But when you're in a trade, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.